The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 21st Solar Eclipse Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we'll go check out these markets. We'll go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Now is not too soon, 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com. And inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magnificent, magical Monday. Magical because of that solar eclipse. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the market's relatively flat. You've got the Dow up 13 points, the S&P up 3, NASDAQ down 4, Russell is flat. The semiconductors, they're the big leader to the downside, off 6%, 0.6% out there. Slightly different. That's off about $6. New York Stock Exchange is up and flat. Wilshire's up and flat. Trannies are up 0.5%, up 41 points. Volatility index back 7%. Gold is up $5. Silver's up 4 pennies. Light sweet crude off 88 cents, trading out at 47.63. The leader to the upside, Wooba. 58.com, that's up nearly $11 or 20%. AutoZone is up 9. Herbalife up 7. NetEase up 5. Public Storage up 4. To the downside, it's Tesla leading the charge. Dollar-wise, $13 and change, nearly 4%. Ulta Beauty Salon off 8.40. Priceline off 8. Amazon down 6. A Snap, crackle, and it is popping to the downside. That's down. That's SNA. That's down 5 buckaroonies out here. But I want to look at what you want to look at. No emails as of yet. No requests inside the Tiger's Den. So what is it that Stevie and you are watching for? Well, let's start off by taking a look at the indices of the ETFs out here. Which one should we do? Normally I do all the futures contracts. Let's do the ETFs for all the home gamers out there that don't have access to that. We're going to turn off these market profile levels. Let's just start off with Dow Diamonds out here. So if we take a look at the Dow, you're going to see this, well, almost across the board. Not entirely across the board, but almost across the board. Each of the indices, the ETFs, most of the ETFs, they're setting up the A to B equals CD to the downside pattern on a daily chart. Now, we haven't seen, last time we saw one out here, if we take a look at the diamonds, where is the last one that we saw back here off of the Trump bump, so to speak? I guess you could classify this one right here. Let's go ahead and add this one. Oh, the other one just vanished. But here's your first A to B equals CD pattern, the 1.618. A to B equals CD to the downside. The actual confirmation of it really didn't come in until April the 20th out here. But that certainly was a Gartley buy pattern. We say Gartley buy because there's a huge trend in one direction, in this case to the north, to the upside, and then you have a corrective pattern, an A to B equals CD, to the opposite direction, to the downside. So we have, in essence, the same pattern that is ongoing as we speak right now. And if we take a look at it, how are we going to know when that pattern is complete? It's an excellent question. We will know because the cavalry will ride into town. Now, it may not do it on this specific ETF. It may first occur inside the equity futures contract, may occur overnight, may occur early in the morning. But that would be the first indication. But we can see here, could actually occur today. You could get a hammer candle as we speak right now. You could get looks like a bullish engulfing bull sash candle, perhaps right at the end of the day. Just depends on the close. We don't have anything right now, but you can see that you have done the 1 to 1.618 price projection. This is inside the diamonds. It's not exact to the tick. 216.04 was the number that would have been the 1 to 1.618. You're down to 215.73. If we go take a look at the SPYs out here, the SPY for the S&P 500, you're going to see a similar pattern. Now, in this case here, the SPYs have only done the 1 to 1 price projection. Now, that 1 to 1 price projection would have taken it to 242.36, low so far 243.20. So heading, and we do have a bullish reversal signal as of 112. You do have a bullish engulfing candle. It's all going to depend on the close. Why is that important if you have a bullish reversal candle? Because if it does, you then on a daily basis would have a confirmed Gartley buy pattern out here, or you would at least have a consolidation pattern inside of the SPYs out here, because price certainly is back here testing the swing point area from June the 29th, which had 106 million shares to the downside, and 136 on Friday today. Very light volume as everybody's out gazing at the sky out here. If we take a look at the IWM, another A to B equals CD to the downside. In this case here, wow, look at how far I've got to go. This is almost done the 1 to 1.618, A to B equals CD. No reversal signal here inside of the IWM. It would take a close about halfway into the candle session, not about halfway. It would take a close halfway into the body of the candle session from August 17th in order to be able to give you a reversal signal. If we take a look at the QQQ series ETF, you know, this is where I personally, I don't really care for the lightning bolt pattern. When it does a retracement like this, that looks like 80%, 90% out there. It's really just consolidating, if you will. Nonetheless, you know, you've got the 1 to 1, A to B equals CD. The signal's not going to come from the Qs. Maybe it'll come from the NQ, but it's not going to come from the QQQ series ETF. So we could do this ad nauseum, but I don't want you to be the nauseum piece of it. But what we are looking at is the first Gartley buy pattern inside of the inside of many of the ETF structures that we have seen for a fairly long time out here. And if you are a fan of HM Gartley, then you're going to keep close eye on those patterns. Now, how are we going to know, in addition to what are going to be the early signals that that pattern is unfolding? One of those things that you and I will pay attention to is we'll take a look at the market breadth on a 60-minute basis. Now, you and I, we don't look at this chart too often. We probably should look at it a little bit more often. But this is the 60-minute, the top pattern, by the way, is the 60-minute market breadth profiles provided to you and I by our friends over at Taz Market Profiles. What you can see as we speak right now, there's a little kissing going on. You've got 32% of the stocks inside the S&P 500 above their box. That's bullish. 32% below their box. That's bearish. I don't know if they're going to do the French kiss, but if they do the crossover, then we have action. Let's see what the team.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So I guess a eclipse is eclipsing out here, eclipsing the show as everybody's out looking at it or watching it. But for those of you that have stayed here because you're just simply giving me that gift of your presence out here, well, that eclipse looks pretty cool on television. We were talking about taking a look at the 60-minute TAS market breath out here, because if we're going to see a bullish crossover, which we have not, all we've seen is a little kissing, and it's going to tell us whether or not the continued downside pressure, this on a 60-minute time frame, is still in force out here. Now, if you take a look at where the red line crosses the green line, the last time that we saw that bearish crossover, 10 o'clock in the morning on August the 17th, and we come back to the 60-minute chart out here, that's where Stevie's white line is, light white arrow. We kind of got to call what it is. It's an arrow, and that's where price opened up at about 24.58. You're at 24.26 right now. So from just a good turn standpoint, there can be jostling back and forth. It's an excellent tool to go ahead and utilize in addition to other signals that would be present in the market. We do not have that bullish crossover. We could get that at any point in time. If we do, what does that mean? That means that we've got at least the next, we'll call intermediate, short term, can't call it intermediate. Intermediate, we'd have to take a look at probably a weekly or at least a daily crossover. But this is what the 60-minute tool is showing us. Now, I know that we don't have a bullish signal right now, and I know that because I can take a look at what's going on the 30-minute basis. If I take a look at the 30-minute basis, she just crossed over negative. You can see this took place right here at 1:10 p.m. 10 minutes ago. We saw a little bit of a bearish cross. We're seeing a little bit of pressure to the downside. But I would be focused more, or I am focused more, on the 60-minute message out there. What else will we see if, in fact, the market is forming a bottom? Because we've got those A to B equals CD patterns out here. We just don't have any confirmation. If we take a look at the early or shorter term time frame charts out here. This is the ES Mini. We'll go take a look at the 30-minute profile out here. And at this stage of the game, all we have, not that it's not worth paying attention to, is a 7th wave move to the downside. That's where the bottom came in earlier this morning. So you've got that potential for a bottom on a 30-minute time frame for some of the tools that we utilize. If we go take a look at the 2-hour chart out here, the 2-hour time frame, we can see price has been moving lower, doing less relative energy. We've had some bullish candles that have identified that the market is trying to form a bottom. So all of this taking place at the same time of that A to B equals CD down pattern. We go take a look at the 5-hour energy drink chart out here. It too pushing lower, doing less relative energy. Now, the beauty of this chart pattern out here is what we can see is that at the price point of $24.29, that is Stevie's red line, that is the resistance. So if there is a bottom, not only would you see a crossover on that 60-minute TAS market breadth, you also would see price close above $24.29 out there. So we know exactly what to be paying attention to. And if we go take a look at the ES Mini on a daily time frame, you'll see the completion of that Gartley buy. Well, not completion, because we don't have a bullish reversal candle yet. But you can see the 1-to-1, A to B equals CD to the downside. We just don't have the bullish reversal candle yet. We could, but we don't. And if we do, then what you've got is you've got a bottom. And that bottom would go ahead and take price up to the 24.56 level at a minimum. So we know what to keep our eyes open for. And in this case here, you don't need sunglasses. All you need is the nerve to take the next trade out there. What else will we see if, in fact, the market does form a bottom, whether it's this afternoon or overnight out here? What we will also see, you and I will see that volatility index come down even further. Further to where, Steve-O? Excellent question. It's on its way right now to the price level of 1252. You're at 1334 out there. If it gets below 1252, then you'll look for the spot volatility index to get down to the 1141 level. That's where it's going to make it or break it on any kind of bounce to the upside. Because if it breaks through that level, 1141, then you're looking to move all the way down to the 944 level. And that will set up probably outcome number 3 inside the Gartley pattern. Remember, any Gartley buy, any Gartley sell has 5 different potential outcomes. Outcome number 3, as you know, is that 0.618 retracement level. But first, what the volatility index has to do, it's got to prove itself to you and me. It's got to not just get down to 1252. It needs to close below 1252, but it looks like that is where she is headed to. And if in fact that is the case, you'll see these buy signals occur inside of the ES Mini out here. You may even see it if it occurs during the day inside of the SPYs. Looks like our first question is in, and that's from Matt in Vail, Colorado. Matt says, how does SRC CL being a light sweet crude contract? Well, let's go take a look at it. Let's look at it with a couple of different tools out here. One of them I'm trying to prepare on my other screen. And while I do that, I'll just tell you a funny joke. I'm just kidding. I don't think I can do those two things at once, and I'd probably screw it up. But let's go take a look at the September contract for light sweet crude. Trade out at 47.68. Right now down 83 cents. And let's go take a look at it, also utilizing our series of market profiles. The 60 minutes, the first one, that's one on your left-hand side. The one on your very right is the weekly time frame chart out here. So as we take a look at it on the 60-minute time frame, what we can see, Matt, is it's below support. Support would have been 48.15. That box on the 60-minute time frame, equidistant, meaning the center really is in the center, and that bottom of the box did not hold that support. If we go take a look at the 4-hour chart, 240, we'll see that price ran right down into its level of support, and that was 47.72. It actually got down to a low of 47.64. But thus far, it has bounced off of the top of a brand new box formed, it looks like maybe about 12 hours ago. So 47.72. Matt, if it closes below light sweet crude, below 47.72, you'll see a beeline down to about the 47.13 to 46.97 level. Brand new daily box that formed today. If price were to close below 46.97, then that opens up the price level of about 44.29. That is what the market profile charts for light sweet crude are showing to you and I. If we go take a look at Stevie's daily chart out here, what we know is that we have a nice little Gartley sell pattern, right? That Gartley sell pattern looks like this. We'll go ahead and paste this into the system. Here's your Gartley sell pattern when it made that little dark cloud cover. This is the exact opposite, in essence, of what you and I are looking at inside the SPYs or the ES or the NQ maybe, the YM or the Dow or the diamonds out there. We're looking to see if this pattern is going to unfold out here. So in this case here, you have an active Gartley sell pattern. Now, price has been boinging around Stevie's red line. You're back below it, 48.34. Says there is more retracement. Now, this could be setting up an A to B equals C to the downside. Those profiles, if they start to fail, would suggest that that is what's occurring. Now, where would price head to if this is an A to B equals C down pattern inside light sweet crude? That would set up, by the way, a Gartley, HM Gartley buy pattern in the 44.77 to 43.69 level. That won't occur until you see it close below 46.46. That one's for you, Matt, in Vail, Colorado. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, question here from James. James writes in and says, "Hi, Steve. I bought Home Depot HD is the ticker symbol at 147.38. It's currently 149.62. I'm up a couple $100 on his investment, his trade. My concern is a 5 to 10% downturn. How will Home Depot react?" So I'm imagining you're talking about a 5 to 10% downturn in the markets out here versus 5 to 10% downturn in Home Depot. So let's just take a look at the Home Depot chart out here. Now, let's turn off this A to B equals CD to the upside. One of the first things that we see out here is we do see this nasty island top reversal, May 16th, that formed out here. And in essence, it's really still a valid pattern out here, although we did see that gap get closed back on June the 19th. But you're seeing out here, James, one of the things that you are seeing is you're seeing a series of lower highs, which is really important once the first swing point got broken. The first swing point inside of Home Depot that I'm referring to was June the 12th. Now, that swing point, by the way, had volume of 4.4 million shares. It was busted with 11.4 million shares. Nonetheless, we still saw a bounce out here, and that bounce gave us a lower high. If we take a look at the A to B equals CD down pattern in here, where that completed, here's your A point at the top of that island top on May 16th, your B point down here on June 12th, your retracement up into June 20th. You're going to see the 1 to 1.618 A to B equals CD. You have the cavalry arrive here with a nice little bull sash on July 25th. And then the question was, just the question is going to be for us in this market, is once that pattern completes, whether it's just an A to B equals CD, as is going on perhaps inside the Qs or Gartley buy pattern, as we took a look at the diamonds and the spies, are going to be where does price head to? Because that's going to be the next big tell. Does price get all the way back up and make a 100% move of a move? Does it take out the highs? Or does it only do a retracement, such as Home Depot did back here on August the 14th, setting up its second lower high out here? So that, regardless of what the market does, you have lower highs that have begun inside of Home Depot and breaking swing points out there. Now, the other bad news bears piece of it, or what it is you're looking at for further move to the upside inside of Home Depot, is you really need to see price get above Stevie's red line number. Now, that's 150.78. By the way, I didn't give you the market profiles. 152.16 is the daily level that you need to see price get inside. But I would be more concerned with Stevie's red line right now. Now, this is not to say that price couldn't get up to the 150.77 level. You only 149.73, because it most certainly can. The question is going to be, can it overtake that level? Here's the bad news bears, and that is that we saw price from underneath the price oscillator here, which got down below zero. We saw price get up to the red line, the zero line out here of that price oscillator. And just as it was doing that, that's when it was making the actual high out here on August 14th, when price began moving lower. What we have right now is a falling price oscillator below zero. You don't really like to see that, and this suggests that what we could see is another A to B equals CD to the downside. So, keep your stops tight. Let me put up the weekly time frame chart, see if price found support at any weekly profile level out here. Still blue lines. It's right now for this week trying to get back inside the box. That would be 148.74, but I say if it doesn't get above Stevie's red line, just simply be careful out here. We could really have just a consolidation. So the daily shows those lower highs out here, having taken out a swing point. In the case of the weekly chart, we don't have that. What we have, let me turn off the profile levels out here. So you see on the weekly chart, you haven't broken a swing point. That would have required a close below the week that began April 17th, 145.76 out here. So as long as price stays above that on a weekly time frame, but see, it sounded to me based on your email that maybe you're more looking at this as a trade, so you might be more focused on the daily than you would on the weekly time frame. But what you'd be looking for now on a daily time frame to confirm that this wants to continue moving lower, and when I say lower, the price objectives are going to be somewhere around initially the 1-to-1 is going to take you to 139, the 135 or 134 is going to be the 1-to-1.272. That would be your better Gartley buy pattern from a longer term standpoint. But again, I don't think you're looking at this from a longer term standpoint. That would occur with a close below 144 and a quarter, so about another 5 points or so to the downside. So in summary, if I come back and I take a look at your question out here, you're more concerned about whether the market makes a 5 to 10% downturn, and Home Depot itself is kind of giving you kind of a message that it still wants to move to lower price out there. Close above Stevie's red line, and then you've got something out there. So, hey, nice trade at this stage. I hope it continues to work out for you. Just, if you're going to stay in it, just go ahead and set your – here's the daily chart. What did we do on the daily? Did we test the swing point? We didn't. 7.3 million shares, 7 million shares on Friday, and today just a couple million shares. So I'd say be careful with this one, James. And thanks for writing in. I did put these charts up here. These were the daily, weekly, and monthly profile charts out there. So sorry to have turned those off. Okay, let's go and take a look at, I don't see any other requests inside the Tiger's Den. We'll check the email system here real quickly. And James, you're welcome. That was quick. That was quick. So what do we want to look at next? What would you guys like to look at next? Anything. Pick a card. Any card. All right, somebody picked the golden card out here. Somebody said, let's go take a look at gold. So let's go take a look at gold. Let's put up the current contract here for gold. Trading on 12.96, up 5 buckaroonies out here. What do we got when we take a look at this chart for Goldilocks? We got some slight problems, potential problems out here. We might have just simply a consolidation pattern. And for those of you asking the question, hey, Steve-O, if gold does bust out the highs, where is it headed to? Well, I'm glad you asked that question, because here is your consolidation inside of gold. And all we really need to do is just simply take that measured move. That's going to be from a price point of about 1304 down to a price point of about 1211. And then all we have to do, whoops, that's truly making it small, is just simply go ahead and put that consolidation box on top of a potential breakout. If it occurs, we don't have any indication to suggest that that's what it's going to do. We do have indications to suggest that that's what it's not going to do. But that would take us into the 1400 level, 1396, if we had a breakout. That's the breakout party. Now let's go give you the bad news out here. Bad news bears when it comes to Goldilocks. What is it that you're going to go ahead and pay attention to? And you are going to pay attention to Friday. You are going to pay attention to Friday's close out there. Why? Because for those of you that like hammers, well, that's an upside down hammer with price moving higher and rejecting that level. Of course, when I take a look at this chart, it's really not a shooting star. It's interesting. So the way that it finished, I take a look at this chart, it's not. Nonetheless, it's still completed. It doesn't show here, but that is wave number 7, wave letter G. Here's your resistance level established really by that bearish reversal signal, that little bear sash candle, and that's at the 1303 area. Steve Rhodes with TFNN.com. We might have your good old-fashioned consolidation.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Hi folks, the 800th edition of the Gold Report will be published next Monday. To celebrate the last 15 and a half years of calling the gold market, I'm doing a special promotion. You can receive 60 weeks of the Gold Report for only $600. That is $10 a week, which is a savings of 50% off the regular price. If you want to understand the entire supply and demand equations that move the gold market, including where the XAU, HUI, and mining equities are looking to trade, if you want to understand the correlation between the dollar, the yen, the South African rand, bonds, and gold, the Gold Report is for you. I'll give you the entry price target, and stop for each equity, ETF, future, or option trade. The Gold Report is a long-term newsletter with the focus on building real wealth to a successful portfolio of gold and silver equities. You can take advantage of this special promotion until August 27th. That's 60 weeks of the Gold Report for $600, which is a 50% savings. Go to the front page of TFNN.com or call 877-518-9190 and order now.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Keep those cards and letters coming in. For our man, David White, our polar bear, the question is, hey, Steve, IBM going to 136.80. Well, if we take a look at IBM, here's your daily left-hand panel, weekly center panel, monthly right-hand panel. You'll see that price is below all of the bottom of the boxes out there. So we've got no support when we take a look at IBM utilizing market profiles. Nonetheless, what we can see out here looks like A to B equals CD to the downside on a weekly basis. That swing point was the swing point that began May 8th, 2017, 28 million shares, and that was taken out with 40 million shares. So let's go take a look at that lightning bolt price projection. We're going to use as our A point. Looks like the high out here was the week that began February 13th, 2017. We just talked about the B point. The C point is a little retracement, slight retracement into the high of the week of June 12th. 1-to-1, that was only a 22% retracement. 1-to-1 takes you all the way back down to the swing points out here from February 2016. The swing point low was 116.90. Polar bear, what was the number that you gave me? You gave me 136.80, and you're at 140. Well, 136.80. Not that it can't stop there, but I don't see that. I see even lower when we take a look at IBM. Looks to me like this thing is going to go ahead and run all the way down to that swing point from February in 2016. And we'll have to take a look at the volume as it does that. If I look at the daily chart out here, maybe there's something on the daily chart pattern-wise that you're looking at out here. I see nothing but gaps. Is there a gap down here somewhere? As I move this sideways, well, here's the gap. Oh, there's the gap. Let's see if this is what our polar bear was looking at out here. The gap, the sign of strength on a daily chart, that occurred on February 18th. So that's during that same time period. And the low of that gap is 129.75. So the answer is no. It still didn't come up with the number that David was looking for, the June 27th low. June 27th low. June 27th low out here. I'll say it one more time. That's the low right here. That's got 5 million shares. We're below that. June 27th, 2016. Looks to me like we are below that level out here. So I'm going with my original, headed back into that weekly swing point, or at least that little sign of strength on February 18th, 2016 out there. And that is what I see on IBM. Phil writes in and says, "Hi, Steve. Hi, Phil. YY as an AB equals CD down or potential up to, not down. Bought the same at 75.26. What say you?" Well, let's go take a look at the YY out here as a ticker symbol. If we just simply take a look at market profiles, this says that it's headed to 80.25, and that would have to take out a swing point from August 10th that had volume somewhere in the vicinity of 3.5 million shares out there. So you're going to need more than that in order to be able to get any kind of A to B equals CD to the upside at the present time with it. Watch 80.25, and while you're watching 80.25, I would say watch volume. You want to see it have more than 3.5 million shares as it's moving up to that level. What does it mean if it doesn't? Just means it's not going to bust it to the upside out there. Support on this may be around 71.98. Weekly profiles aren't providing you with anything. Monthly profiles aren't providing you with anything. If we take a look at the monthly, though, we can see that the swing point, that's usually where a market will, when it tries to get either up or down to a swing point. That's why I looked at the swing point when we looked at IBM. It's a natural target level. Doesn't mean it'll get there, but becomes your target level. And on the weekly basis, the monthly basis, I should say, September of 2014, you had 38 million shares to the upside. You have pushed into it. You are pushing into it right now with volume of 33 million shares, and it's only the 21st. So looks like it's pushing in there with volume. So, Phil, if this can close above for the month, 74.60, you're at 75.87, you're still in it, and it has more than 38 million shares, it increases the likelihood, searching for words out there, the likelihood that you would see a move up to about the 96.39 level out there. And that is what I see inside of YY. Thanks for writing in. PS, cut, you looked at before, sold half here and there, target extension and base we looked at before. Okay, let's go take a look at Suman wants to take a look at CF and the QLD. And the question is, Steve, where will be buy points? So let's go take a look at it. Let's do the same thing here. CF, what is that? CF Industry Holdings out here. If we just simply take a look at the profiles, both daily, weekly, and monthly out here, we're going to see prices basically in between all of those boxes. So more neutral than bullish or bearish. I would say on all of those time frames. The bullish side says price wants to get to 30.07. That's not what you asked me. The weekly says 31.44, and the daily monthly says 34.90. Buy point on this. Well, let's start off by taking a look at the daily charts out here, Suman. If we take a look at the daily chart, what are we going to see? We're going to see certainly higher lows that have been forming out here. So you don't want to necessarily see this get below the low, we'll call it, of August 3rd. That price point is 27.77 out there. Now, Steve would also say, oh, that's the monthly chart. I want to do this here. I'll take a look at the daily chart. I'm sorry, I'm off the screen. I'm off the grid, so to speak. Just looking for other patterns in the other sets of tools that I have out here. So at this stage of the game, your question was, where is a buy point? 28.23 might be one. Here's the problem. Here's what I don't like. What I don't like is that this brand new box that formed out here, the bottom is below the prior bottom out there. So it's not, so your 28.23 is the number to be taken a look at. And you just really want to see volume lighten up on the way down. That is on the daily chart. Give me a moment here. Let me go take a look and see what kind of wave count it made up at its high. Nothing necessarily to worry about. Would suggest pulling back to 28.23 would be the number. 27.41 on the weekly chart. I'm going to go with 28.23 as the number inside of CF Industries. I'm assuming, Suman, that you've been watching this. So, in that short period of time, that's the number that I would be looking at. You also asked for the QLD. The QLD, you're just simply going to have to wait until we get a buy confirmation, a series of buy confirmations inside of the shorter term charts, inside of the charts for polar bear. How about that? How about that set of trend lines there for IBM? I'll talk about on a monthly basis. But Suman, before you go along the Qs out here, I don't really have a price point to give you because it's going to really be more about the patterns that form inside of the daily charts for the equity futures contract, maybe even the intraday charts. Take, for example, the NQ 5-hour chart. When I say take for example, I mean take it for example until we get back from this next breakout here. But 5807 is what it's got to clear. You're right.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Flat market. Dow's up 3. S&P is up 45 cents. NASDAQ 100 up 13 points. Russell is up a couple of points. So let's finish off the show here for Suman. And the question was, where's buy points on the QLD? And so what we have to do is we really need to wait for some type of turning signal out there. And where that's likely going to occur, where I'm going to get my information from to answer that question, we know we've got the A to B equals CD down patterns potentially out here. We can see prices been moving lower, doing less relative energy. Now we're looking at the 5-hour energy drink chart out here. And the reason that we're looking at it and that we're paying attention to it is because certainly the top that it formed out here was a top. But this pattern works better than anything else that is out there at being able to identify tops and bottoms. So we can see prices moving lower, doing less relative energy. Price found resistance at Stevie's red line. You need to see some type of bullish reversal signal to complete this pattern. You need to see a close above Stevie's red line. And then at that stage, I'd say, okay, it's time to come in. If what you're trying to do is buy a bottom tick inside the market, then you've got to really go to even shorter term charts and just simply pray that you've timed it correctly, because you will not have seen the turn here in the 5-hour drink chart out here. That's for the NQ. You were asking about the QLD. You've also got to, or you'd like to see some type of reversal signal inside of the on the daily time frame out here. We don't have that just yet. So just simply, it looks like the 1-to-1 A to B equals CD inside the NQ. The next Gartley buy pattern inside the next inside the NQ might take us down into about the 57.14 level, somewhere right around there. That's just a projection. You and I are just projecting at this stage here where price might head to. What we're really paying attention to is not so much that tick. What we're really waiting for are some signals on the intraday charts that then lead up to the daily charts. Now you could get a nice healthy bounce if in fact we see that bottom. But I can tell you, as a 1:56 in the afternoon, it ain't here just yet. But maybe it will be during that 2 to 3 o'clock hour when your favorite polar bear in mind, David White. He's up next, and you got Tom O'Brien from 3 to 5. Have a great Monday. We'll see you on Terrific Tuesday, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.